basically making this video to go over trading the trend. And I'm gonna just put my face back on the camera because I don't know why it disappeared. Float on top, there we go. So I want to talk to you guys about trading a trend and how it was hard until I did this. So the first thing I want to do is just give me 1 second. Yeah, so to do the trend, I want to go ahead and show you guys how I'm even doing this. So I'm actually just gonna go ahead and actually no, I'm not going to delete anything. I'm just going to leave everything here. So if you notice on the screen below, you should see the charts. So what you see is what you see are white lines, one red line that says COS on the left side of the screen, which is right here, COS, and what you see is another two gray boxes. One right here where I'm drawing the arrow, right exactly now, right there, and another gray box right there. And so here's how you find the trend, because as you know, the trend is important, obviously, because if you want to make money, the whole point, based off your trading strategy, you need to know the trend so you know which direction, because there's only two ways to make money in Forex: buying and selling. And so to determine that, you would do your trend. And so what I do is so I'm on USD CAD right now. What I will usually do is so just go ahead and zoom all the way out, and you will find those two lines right there, white lines. And so those two white lines represent the current range, but technically now it isn't the current range, because if we look here, I know it's kind of confusing. Just give me 1 second, guys. I'm actually just gonna go ahead and delete it because I don't want this to be difficult. We're going to identify our trend, and then I'm going to show you guys how to enter the trade. That's going to be simple. The video is about the trend, but I'm going to show you both. So let's turn off the trading panel, and let's first identify the trend. So the first steps to identifying the trend are identifying your current market structure / you're probably used to trading trend lines, but we're doing structure. So the first thing you're going to want to do is you are going to want to take your white line, which should be a white trend line tool here, and you're going to want to zoom all the way out. So as you can see here, zoomed all the way out, we see our current high, which is right there, and I'm going to make that white, and we see our current low, which is right here, and the current high and current low are significant highs and lows. And to find these significant highs and lows, you need to zoom all the way out. So when you zoom all the way out until the screen can't anymore, like you zoom in and you zoom out. And so now when you zoom all the way out, it shows you the significant structure that's maintaining the actual price. So if we zoom all the way out, obviously we're in bullish structure, right? So we're going to take and continue marking up all the relevant highs and lows, the major ones. So we have our current high, our current low, our previous high, which is here, that broke and left that gap behind, and our previous low. And so the first thing I want you to notice is our previous high, which we have all the way right there. So that's our previous high, right? So if we notice here, now our new high is up here where this arrow is. And when we broke that new high, we had to have some sort of volume and volatility, because volatility is needed to move any market. So we most likely had US news yesterday or today, and now because of that volatility, it broke structure. And so I call this, there's what's in Forex, there's break, depending on your strategy, because I trade smart money concepts, there's break of BOS, break of structure, and there's COS, continuation of structure. Break of structure is more of a trend reversal, and then the structure is breaking, causing a new trend. A COS, continuation of structure, is more of the same trend, but you're breaking a new high that's continuing that structure. So this would be a COS, continuation of structure. So what we're going to do is we're going to make a new line from that previous high, which is over here, and we're going to label it this. That red line, not BOS, that's the wrong one. COS, because we're continuing the trend up. We're continuing the trend. So that would be our COS, continuation of structure. And so what you're going to do is, after we have that continuation, whenever there is volume and velocity, whenever there's volume and volatility in the market, there will always be supply and demand zones / fair value gaps or gaps left behind in the market. So yeah, so this right here is a gap. What you're looking at under my face, that is a gap. And the reason, and gaps are basically where price has left an imbalance in the market, because a balanced market goes what? Up, down, or in the bearish situation, down, up, up. And so because we went up, we didn't necessarily go down into this gap, which you see that gray box, before going back up. And this, you see all that, all that room right there on that candle that didn't get filled. So healthy price action, if you look here, Bill, I'm gonna make this real simple. You see under before we had that that giant blue candle, which is right to the right side of my screen. You see how before we had this giant blue movement, that bullish movement upward, we had all this price action right here. So this is called healthy price action. This had medium to low volatility because the market isn't moving so dramatically like we saw right here with the blue. And because of that, you'll notice before in the past, before there was volatility, we had a high right here. And let me just draw it because you guys know what I'm talking about. We have a high right here, which is where you see the white line. We have a low right there. We have a previous high and we have a previous low. So that was already in a bullish trend, right? But the thing was, it's healthy because price has been coming down to correct, and before going back up. Price never just goes straight up. It always comes down. And so what we failed to see here was price coming down into this giant bullish zone here, which we have with the gray box. Price failed to come into this zone, and what we're expecting is price to come into that gap for a reversal, or fair value gap, imbalance gap, for a reversal. And so two things will happen. So what I'm expecting is price to come down into this zone and either leave a candlestick that looks like this with a wick. I know it doesn't look anything like a candlestick, a wick. And wicks are usually good rejection confirmations that price is rejecting. So I either want to see a wick, or I want to see price come down there and either with a wick or not, and come back up and break structure. So by break a structure, ruin the previous trend, which is a downtrend that caused it to come down here in the first place. What I mean is, so in order for price to come down to our gray box, price has to come down, right? And so because of that, that will form bearish structure, bearish trend. And so once price comes down, we want to see price jump back up and disrupt that previous downtrend by going up. And so what happens is then you will see demand, volume, we'll see giant blue candles, and we can enter off of these gaps. So those gaps that you see that gray box on, and now you see there is a gray arrow to the left side of the screen, these gaps are tradable. And this is one of the 3 types of setups I trade personally. But yeah, guys, I want to just make a little quick video. And yeah, so the gaps that you want to trade, if you're trading and then the price is bullish, you want to trade the gaps that are closest to your low, because that is where the cheaper price is. Like when you're buying a dip, when prices are cheap. So when you're buying for money in a bullish trend, you always want to buy off the low gap so you can make the most profit. When you're selling off of a high gap, you want to always make sure you have a you want to be selling high to make the most profit. So when we're selling, we're going down, we're going up, and the duration of each trade depends on that zone you're trading off of. So if we want to buy, we want to have a longer profit and a lot of profit. We want to buy at the lowest price that is available. And what determines what price is available is doing your trend searching and doing your market structure. So this works if you're trading it, if you're an ICT trader, if you're a smart money concepts trader, if you're a supply and demand trader, blah blah blah. But yeah, guys, I hope this video helped. I just wanted to make some quick tips. So the first step is identifying your trend through market structure. And to do that, you want to zoom all the way out, starting from the 15-minute time frame and up, and identify 4 pieces of structure that shows you price is bullish. So bullish structure looks like this. It looks like we go up, down, up. And in between that structure, what's forming that structure are the 4 pieces of structure that make that shape, which is this. Okay, so our highs and our lows create that shape that you're looking at right now on the screen. So that is called a bullish trend when the price is going up, right? And so when we're selling, we want the opposite. We want price to come down, then go back up, then come down. That's bearish structure. And so if we look at the bearish structure, the bullish structure I drew first, if we want to buy this structure, we want to divide this range in half like this. And then that range I'm dividing in half is the green line. That green line represents the range being divided in half. Okay, so if I'm buying, where am I buying? Which side of that green line do I want to buy? I don't want to buy on the top of the green line because that's where prices are expensive, because that's the top of the range. That's where fear of missing, FOMC happens, fear of missing out, things like that. People are losing. So I want to be patient, which is a key to trading, and I want to wait until price comes down to this low here. And once it comes down to this low, below that green line, that is known as our discount price levels. So the shaded area with the gray box that I drew under the green line is called the discount zones, or the discount area. And within these discount areas are areas where you'll find demand, cheap demand, where demand started, where the trend started. And you can basically view this as getting into the trend early. But yeah, guys, I hope this video helped with some value. I like to keep things really simple. The video was short today. If I didn't go in depth enough, ask me. I have a free groups. I mean, I have groups and I have a community. None of them are paid. They're all free. The only thing I charge, guys, is one-on-one. I don't have a course. If you guys want videos, I can make them. I can custom make them for you. I don't do this whole thing everybody else is doing. If you want to learn, you come to me directly. But yeah, guys, I hope this helps. And I also have an ebook with picture examples, so you can learn my mindset and learn the types of setups. So you can, all the setups I trade are in the ebook, and there's actual pictures of it, so it's not words. So if you're a visual learner and you like the ebook for that, that works too. If you're a descriptive learner and you like to read, you can do that. But I hope this video helped, guys. And yeah, so just remember what I said, rewind, watch. I recommend you watch this video again. But yeah, my goal is to help you guys become more consistent and be able to either learn a new strategy that works, that's consistent every week, or continue improving your strategy and just learn how to be consistent. And I'm just here making videos and being myself. So yeah, if you guys want to talk to me, you can. I'm here, I'm available, and I really love you guys. I love the support you guys are giving me. I'd appreciate some comments. Ask me something in the comments if you guys need some help. But yeah, peace.